Here, we will understand when to enter a trade. Often, simply following a strategy isn't enough, because a single wrong entry can render your entire analysis futile. So, knowing a better entry point is crucial. And that is exactly what we will explain in detail today. Regardless of the strategy you follow, we will teach you how to identify a better entry point. We'll start by understanding the 200 EMA we've added, then move on to other indicators, and finally cover methods that don't rely on indicators at all, such as using support and resistance levels. Please grasp this concept thoroughly now, so that you can easily follow along later without us having to repeat the same points. You are free to re-watch the video if you wish. Here, we won't be going into the details of any specific indicator or strategy. Our focus today is on something even more important: understanding how to take a proper entry. No matter which strategy or indicator you use, there are certain factors that should always be checked before considering an entry. Ignoring these factors can lead to poor decisions, even when the strategy itself is correct. So, in this lesson, we'll focus entirely on the analysis process that takes place before an entry is made. Once you understand this concept, it becomes much easier to evaluate any setup with confidence. With that said, let's begin. A breakout above the 200 EMA has occurred here, and we identified it because a green candle closed above the 200 EMA. However, we do not enter on the very next candle because the second candle has not yet confirmed its position above the level. It is possible that the first candle closed above the EMA due to strong short-term momentum, and the following candle could move back below the level. Therefore, we prefer to wait for additional confirmation before considering an entry. Okay, a breakout has occurred here. However, we should not rush to enter just yet. The market could still move back toward the previous trend, so we need to see this candle continue holding above the level and closing with strength. That would provide the final confirmation we are looking for before considering an entry. I know there isn't much time to enter a trade after a breakout occurs. Otherwise, you might miss the opportunity. But watch the video carefully. We'll explain everything. So, this candle triggered the breakout, and this subsequent candle stayed above that level, confirming the breakout. That's where I can look to enter, on the upside. We simply need to watch for the price to move upwards. That's all there is to it. All right, now let's look at the second condition. We'll move a bit faster this time. Breakout candle, breakout confirmation. And as soon as the candle starts moving upwards, the entry level is set. And here is the exit level. So this same pattern may not apply here because the chart has now shifted into an uptrend. Since a breakout has already occurred at this level, we cannot assume the market will behave the same way again. At this point, a fresh analysis is required. The market may continue higher, consolidate, or even form a breakdown scenario. That is why we should not rely solely on previous price behavior. There is also another important factor that must be considered before making any decision: previous support and resistance levels. These levels help us evaluate whether the market is likely to continue in the current direction or potentially reverse. However, that is a separate part of the analysis. In a future lesson, we will look at how to identify and mark high-quality entry points using these factors together. As mentioned earlier, we need to wait for a candle to form before making any decision, because that candle provides confirmation of the breakout. In this case, that's exactly what happened. Although one candle managed to close above the level, the following candle moved back down and failed to continue higher. This indicated that the breakout lacked strength, and the existing downtrend remained intact. Now, take a close look at this, and then let me know at the end whether or not this is truly the best analysis. We will show you how the analysis is done in the live market. First of all, since the chart is below the 200 EMA, we consider this a downtrend. Next, we look at the analysis here and examine what is likely to happen. Last time, market moves up from here and down from here. So I have added two lines there. So now, here, it can move up to this level, or it may go down. But we can analyze through entry point analysis. Let's see with the moving candles. If the candle crosses above this line, we will wait until here. And when a red candle forms below this line, we will enter here for a down position. But what if it crosses below this line? Look, we don't need to predict. We need to go along with it. So first, we'll see what it does. If it moves down from this level, we will wait until it goes down from its previous pullback. For that, we have added a short line here. And once it goes down from here, our analysis of the entry will be here. So now, we have up and down both of the conditions. If the market continues moving downward, a downward setup may be considered for approximately 3 to 5 minutes. However, it's important to evaluate the previous support level. If support is located nearby, a shorter duration may be more appropriate to account for potential price reactions. In this case, a shorter time frame has been selected due to the nearby support zone. At this level, price may react in either direction. The same analysis framework we've covered so far will help us evaluate the next move. Let's observe how the market develops. We will look at the lower support level for downward move. If it moves upwards, we will teach you the analysis. And if there is confirmation of a downward move, we will explain that as well. So, as you can see here, a market breakdown has occurred. Just as we took an entry earlier, we will do the same here. To do that, we first need to let the candle close below this line. Since the next support level is quite far down, we can opt for a trade with a longer expiry time. I hope you found this video informative and will certainly put this information to use. In the next video, we will look at some confirmatory chart patterns. Once you understand them well, you will be able to predict the next market move. Thank you.